Welcome back. We continue with our earnings analysis, and we now discuss towards the end of Bazaar the best of the results that have come from the banking arena. Federal Bank reported a good set of Q2 numbers. Asset quality improved or hardly showed any cracks. And this has come along with growth because advances have grown by 19.45%. Joining us now is Venkatraman Venkateswaran, the Group President and CFO of Federal Bank. Mr. Venkateswaran, thank you very much for joining us. Well, first up, you'll have managed a very good advances growth. Can you give us some idea as to where the loans went? What was the percentage that went to unsecured loans? Because you don't seem to have any trouble because of that.
Yeah, hi, Latha, good morning, and thank you for having me on the show. To your question on where we have grown on the advances, it's been a broad-based growth like we've seen in the past across business segments, both wholesale and retail. And specifically, if you see by product, the business banking, gold loan, commercial banking, these are the segments which have seen and continue to see a better rate of growth as compared to the rest of the book. On unsecured, we still operate at less than 5% of our advances are on unsecured. Though the base is small, that's why you see the growth rate 40, 50, in fact, some of them even 70% growth. That's purely because the base of the unsecured is quite low. Retail unsecured is still 4.6% of the overall advances. So advances growth is, the engine is chugging along quite well, and all businesses are doing quite well.
Okay, what's your expectation? What was your cost of funds? And do you think that it can still inch? I want some guidance on your margins.
Yeah, on margins, Latha, of course, it's driven by both the yield on assets as well as the cost of funds. Now, if you're seeing term deposit costs have been firm, continues to be firm and will continue to be firm in the near term, given the fact that many banks are chasing retail customers. Having said that, what we have done in Q2 is to reduce some of the high-cost deposits, bulk deposits, and that's why the deposit growth appears a tad less than what we normally do. But having said that, that will be corrected in this quarter. The good part is we are growing our CASA quite well. You would have seen that our CASA grew almost about 4% quarter on quarter. And this is on the back of a good Q1 as well. So the focus on CASA is helping us maintain the cost of funds. On the NIMs, one thing which I should clarify is the reported NIMs is 3.12. But as you know, in the July quarter, we had to make the change of penal interest to penal charges. So on a like-for-like basis, our NIMs has actually improved from 3.16 to 3.19. But given the fact that penal interest has moved to the charges fee line, the reported NIMs is down. So in terms of guidance for NIMs, we'll continue to operate around the same levels, Latha.
Okay, so what is the guidance on margins therefore?
It will be around the same levels.
Okay.
It also depends on when the rate cut comes through, because that will have a short-term immediate impact, given that 50% of the book is repo linked.
Okay, yeah, but at the moment looks, okay, food inflation is still running high and we may land up with a 6% headline for the month of October as well. But without the rate cut, you would be around the same level, 3.1
Yeah, we
levels.
should actually probably, maybe 1 or 2 basis points even better as we continue to drive productivity, and we should see around it plus or minus 1 or 2 bits.
Okay, what is the expectation in terms of the impact on P&L and balance sheet if the new LDR rules come? Because I think in the latest quarter, you all raised less deposits and more CDs.
But what the outcome we have to see, there are several measures which were taken. One is the tenor of the changing in tenor, the type of deposits, callable versus non-callable, and in terms of retail deposits versus bulk. Several steps were taken in terms of improving the LCR, and that is already translated into a better LCR for Q2 as compared to Q1. Our average LCR for Q2 was 115, vis-a-vis 112 in Q1. And we will continue to grow that, make sure that the mix is maintained and get our LCR levels improved over the next, in H2. So even if the new LCR guidelines come in the same form as the draft is, we should be ready to operate at the levels which has been set out by our risk management committee.
So what will the LDR be in case the new rules come in? What will be the loan deposit ratio you will gun for, and will it have an impact on margins?
So we are looking at, even if the new rules come in the same form as it is, we are trying to be in around the 110 to 115. That's the range we want to be in. And all efforts are on to make sure that we continue to grow the right deposits, CASA especially. And you would have also seen that our NRSA has started growing quite well after last year's dip. So last 2 quarters, we have seen the NRSA coming back quite nicely with some of the initiatives which we have taken in the GCC market, adding more RMs and a few other relationships. So it is going to translate to better liability growth, which will help us improve our LCRs.
Will there be any impact if the new project finance provisioning rules come? How much of your book is project finance?
No, that one, we had clarified that earlier in one of the interactions. We wouldn't have a major impact because of that, Latha.
Okay. And what is the growth you are guiding for?
The growth guidance, in the beginning of the year, we were around 18-20%. At this stage, we are looking at around high teens, close to around 18% on the growth.
So slightly lowered your,
lower,
probably a couple of percentage points.
Yeah, we are mindful of the headwinds, the operating environment, and we want to calibrate. Because one thing which we follow, which you know quite well, our philosophy of maintaining pristine credit quality, asset quality, and keeping credit cost at certain levels, that won't be compromised.
Okay. Well, I was hoping that KVS Manian will also join us for the interview, but I'm going to toss this question to you anyway. What has changed between Shyam Srinivasan and KVS Manian? What may be the new growth strategy? What may be the tweaks?
Yeah, good question. See, for this Q2, of course, Shyam was there till 22nd of September. So pretty much, he was there for the entire quarter. Yes. And so the results are, I would say a reflection of what has been done. But more important, it's not the person. I think it's the continuity of the bank's operating rhythm. It's just that the baton has changed from Shyam to KVS. And Mr. Manian has been in this role for a little over a month as MD CEO. And he's taking time to meet people. He's doing his listening tours across the country, meeting people across levels, trying to understand how things are working. I'm sure he will have his own thoughts in his mind. But the good thing is, every year in Q4, we have a strategy refresh with the board. So it fits in quite well with his, it'll take 2 months to understand how we operate. And then we are having our internal discussions. Post that, I'm sure Manian will come and spell out, the next phase of growth for Venkat.
Okay, so at the moment, no tweaks have been announced?
Nothing at this stage. Nothing at this stage. Okay. And, of course, we have a very strong team across all levels. And thanks to that, the performance continues.
Okay, Mr. Venkatraman, pleasure speaking with you, and many congratulations. The stock markets have given you a 7% thumbs up. So that speaks for itself. I don't have to, add any adjectives. One must say, to the credit of Shyam Srinivasan, as you pointed out, he was there till September 22nd. His last quarter has been a blazing quarter, and the markets are attesting to that. Thank you very much for joining us.
Thank you, and wish you all a happy Diwali, Latha. Thank you.
Likewise, wish you and your team as well a very happy Diwali. At the moment, Dhanteras is not being celebrated except for counters like Federal Bank. It is a bit of a red on the screen. It's not gotten redder. That's the important part. In fact, I've seen a little bit of recovery, as you can see, post 10 a.m. in the markets, but still down about 0.5% on the big indexes, mid caps as well. about a third of a percent lower. Bank Nifty is trailing well at this point in time, and of course, very ably supported by ICICI Bank and HDFC Bank. If those two are in the green, then Bank Nifty doesn't have much to bother. A small programming a note before I sign off on Bazaar. As we prepare to ring in the festivities this Diwali, tune in to our channel CNBC-TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Samvat.